Green financing has surged in popularity in recent years as more and more investors are concerned with climate change and environmental issues. These days, when a company issues a bond or even wants to take a loan, investors and financial institutions assess the impact they have on the environment. This has made it difficult for companies who are not directly involved in green projects to get into the ESG market. And that's where sustainability-linked bonds, or SLBs, come in. They're different from green bonds because green bonds raise money for a specific green project. SLBs, however, are linked to the sustainability performance of the issuer. Not every company is involved with green projects, but many banks, real estate developers, and other companies want to improve their sustainability.
It actually offers an alternative product for both the issuer as well as the investor to consider. So in terms for the issuer, for the ones which would be struggling to earmark their use of proceeds to green and social project for whatever reason, then it offers a very flexible structure for them to not having to do that, but still participating in the sustainable bond market by upholding their sustainability performance linking to the bond characteristic. For the investor, some of them may have difficulties in assessing the greenness of the underlying projects of the green bond. So SLB actually offered them another investment product.
Hong Kong property developer New World Development sold Asia's first SLB in January this year. Barely a month later, Surbana Jurong launched Singapore and Southeast Asia's first SLB. Both were received very well by the markets, with Surbana's bond being more than 6 times oversubscribed.
There's been an acceleration, of course, in activity over the last couple of years, and this will continue and even accelerate. Whether it's green bond, whether it's blue bond, whether it's sustainability-linked bond, or transition bonds, any corporate can make a commitment to investors and should make a commitment to investors. If they don't, investors are going to start looking at the corporate and say, well, you are not taking this risk into account. So you as a corporate become more risky to me as an investor. And I'm going to ask for a higher premium for your bonds. So over the next couple of years, pretty much companies will have to start paying premium if they don't do a green or social or sustainable bond.
Experts also say that the pandemic has been a factor in this growing trend as governments around the world focus on building back their economies better, and sustainability is a big part of that.
Every single corporate needs to take into account climate change risk, needs to take into account how sustainable are their operations. They need to have a rethink, whether it's your day-to-day operation, whether it's your supply chain, whether it's your go-to-market strategy. What does sustainability mean to you? Investors are demanding corporates to have a sustainability strategy the same way as they need a digital strategy.
For Surbana Jurong, the overwhelming response was a welcome surprise and indicates the underlying appetite among investors for this type of product.
In terms of the order book, we have achieved more than $1.7 billion when we were just raising $250 million. And in terms of interest rate, it has driven the interest rate down from 2.75 to 2.48%. So you can see that in terms of the interest in this type of SLB, it is tremendous. And it's something that is new in this part of the world. And I think it will also inspire other companies when it comes to fundraising to look at tying up their fundraising activities with achieving certain sustainability targets as a company, rather than just at the project level. So we can see that this is going to drive a lot of new thinking among companies who wants to do something in terms of sustainability.
The bond requires Surbana to meet 2 sustainability criteria. First, they need to achieve a 10% reduction in terms of emissions in 3 of their major operations. The company has also pledged to achieve net zero carbon emissions at their Surbana Jurong campus by 2030. Surbana says proceeds of the bond will be used to fund future growth, refinance existing credit lines, and provide working capital to the company.
If we don't meet these criteria, we will have to pay a premium to the investors, equivalent to 0.75% of our coupon rate at the end of the bond period, which is 10 years from now. So there is a penalty on issuer like us, if we don't meet that sustainability target, and that shows the deep commitment by the company in trying to do everything possible to meet those sustainability targets.
Experts say the successful launch of these 2 SLBs in 2 of Asia's financial hubs will boost investors' confidence in this new financial product. They say the market potential for investors is positive because of the focus on sustainable development, as many countries, including China, South Korea, and Singapore, have announced carbon emission targets.
There are lots of government support in order to transit the economy from a higher carbon status in Asia and ASEAN to a lower or net zero status in 2050 and 60. That would actually require a large amount of investment to transit from, for example, coal-fired power plant to more cleaner energy, to transit from private cars to more public transportation. So I think it's the government support and the investment need would be one of the key reasons why sustainable finance has been developing so fast.